Hello, and welcome back to Boni's Life. In this episode, we're diving into one of the most consequential geopolitical events of 2026, an event that will reshape global markets, reorder international power dynamics, and create unprecedented trading opportunities. We're talking about the alleged US military intervention in Venezuela and its cascading effects on global financial markets. This isn't just about politics, this is about your portfolio, your trading positions, and the fundamental restructuring of how global trade and finance operate. By the end of this episode, you'll understand not just what happened, but how to position yourself for what comes next. Let me set the stage. Venezuela sits on the world's largest proven oil reserves, approximately 300 billion barrels of crude oil. For context, that's more than Saudi Arabia, Russia, and Iraq combined. But Venezuela's oil is heavy, requiring significant refining capacity and technical expertise. For decades, this resource was controlled by the Maduro government, which maintained close ties with China, Russia, and Iran. According to multiple sources from the video references provided, a coordinated U.S. military operation, reportedly involving Delta Force special operations teams, allegedly targeted the presidential palace in Caracas with the objective of removing the Maduro government. The operation was characterized as surgical and precise, with minimal civilian casualties reported, though independent verification remains limited. What matters for traders is this: Venezuela's political status is now in flux. The question isn't whether this happened, it's what comes next. And what comes next will determine the trajectory of global commodity markets, currency valuations, and geopolitical risk premiums for the next 12 to 24 months. Let's talk about oil. The global crude oil market is currently oversupplied. According to the EIA's short-term energy outlook, Brent crude is trading around $55 per barrel in early 2026, well below the $80 to $90 range we saw in 2024. This oversupply has been driven by increased production from the US, Saudi Arabia's production increases, and weak demand growth from China and Europe. But here's where Venezuela changes the equation. Under this scenario, the political transition in Venezuela becomes contested. While a new US-aligned government takes control of the presidential palace, it faces resistance from military factions loyal to the previous government, Chinese and Russian-backed fighters, and regional actors. This creates an unstable operating environment. Venezuelan oil production already collapsed to 750,000 barrels per day from its historical peak of 3.2 million BPD, faces further disruption. Refineries are damaged in the conflict. Export infrastructure is sabotaged. Production falls to 400,000 barrels per day or lower. Simultaneously, China, facing the loss of its primary oil supplier and strategic ally in the Western Hemisphere, begins weaponizing its control of critical commodities. Now let's talk about something most traders are completely unprepared for: silver. On January 1st, 2026, China implemented new export licensing requirements for silver. This isn't a ban. It's far more sophisticated. It's bureaucratic weaponization. China controls 70 to 80% of global silver refining capacity. More critically, 70 to 80% of global silver production is a byproduct of copper, lead, and zinc mining. You cannot simply mine more silver because silver prices rise. The mining decisions are driven by copper prices, not silver prices. Here's what China just did. They created a licensing regime requiring Chinese refiners to obtain government approval for silver exports. The qualification thresholds are 80 tons of annual production capacity and $30 million in credit lines. This is designed to keep most current exporters on the wrong side of the velvet rope. The US dollar index, DXY, fell 9.3% in 2025, declining from 107 to approximately 98.5. This wasn't random. It was the beginning of a structural de-dollarization trend that Venezuela's crisis will accelerate dramatically. Here's the geopolitical reality. The US just demonstrated that it will use military force to overthrow governments it doesn't like, seize their resources, and redistribute them to allies. This is the nuclear option in international relations. Every country watching this event is now asking, could this happen to us? Is my dollar reserve safe? Should I diversify away from dollars? The S&P 500 is currently trading at elevated valuations, with the Magnificent Seven tech stocks, Nvidia, Apple, Microsoft, Tesla, Google, Amazon, Meta, representing 30% plus of index weight. Venezuela's crisis triggers a massive sector rotation. The US 10-year Treasury yield is currently around 4.2 to 4.5%. Venezuela's crisis triggers a flight to safety, with investors rotating from risky assets into government bonds. In this scenario, the Venezuela crisis accelerates de-dollarization more rapidly than expected. BRICS nations accelerate their alternative payment system. China implements broader export controls on critical minerals. The global financial system begins fragmenting into competing blocks. In this low probability scenario, the Venezuela crisis is contained through international negotiation. A new government takes control and immediately begins debt restructuring talks with the IMF, World Bank, and creditor nations. Oil production is restored to 1.5 to 2 million barrels per day within 12 months. Let me be absolutely clear. These are not recommendations. These are educational scenarios based on historical precedent and current market conditions. Your individual risk tolerance, time horizon, and financial situation are unique. Always consult with a licensed financial advisor before making any trading decisions. For traders with a 6-month time horizon and moderate risk tolerance, I suggest the following allocation. A. Rebalancing. Rebalance your portfolio monthly to maintain target allocations. B. Monitoring. Monitor geopolitical news daily. Be prepared to adjust positions quickly. Now, let me give you some hard-earned wisdom about trading during geopolitical crises. We've seen multiple crises. The 2008 financial crisis, the 2011 European debt crisis, the 2015 China devaluation, the 2020 COVID crash. I've learned some lessons. Let me give you specific triggers that will tell you when to enter and exit trades. These are based on technical analysis, fundamental analysis, and historical precedent. The Venezuela crisis will unfold over weeks and months. You need a framework for monitoring developments and adjusting your positions accordingly. A. Stock market. Monitor XLE, XLU, QQQ for sector rotation. B. Volatility. Monitor VIX levels for market stress. C. Your positions. Check your open positions for profit/loss status. For experienced traders, here are some advanced strategies to consider. Now, let me step back and give you the broader geopolitical context. The Venezuela crisis isn't happening in a vacuum. It's part of a much larger shift in global power dynamics. For the past 75 years, the United States has maintained hegemonic control over global markets, finance, and trade. The dollar is the world's reserve currency. U.S. military bases dot the globe. U.S. corporations dominate global commerce. This system has been remarkably stable. But that stability is breaking down. China has emerged as a peer competitor. Russia has demonstrated willingness to use military force. India has emerged as a major economic power. Brazil has emerged as a regional power. The BRICS nations are accelerating their alternative payment systems. The dollar's share of global reserves has fallen from 70% in 2000 to 55% today. The Venezuela crisis is the moment when the old order breaks and the new order begins to emerge. This is the opening move in a multipolar world where power is distributed among multiple centers rather than concentrated in one. For traders, this creates unprecedented opportunities. Commodity prices will rise as the dollar weakens. Precious metals will strengthen as safe haven demand increases. Emerging market currencies will strengthen as de-dollarization accelerates. Technology stocks will underperform as supply chain disruptions mount. Energy stocks will outperform as oil prices rise. This is a 10-year trend, not a 10-month trend. The traders who position themselves correctly now will make generational wealth over the next decade. Let me wrap this up with some final thoughts. The Venezuela crisis is real. The geopolitical implications are profound. The trading opportunities are unprecedented. But success requires discipline, preparation, and emotional control. You need to understand the scenarios. You need to understand the technical triggers. You need to understand your risk tolerance. You need to understand position sizing. You need to understand the importance of stop losses. You need to understand the importance of profit taking. Most importantly, you need to understand that trading is not gambling. Trading is a skill that can be learned and mastered. The traders who make the most money are the ones who have done the most preparation, who understand the markets the deepest, who have the most discipline, and who can control their emotions the best. The Venezuela crisis will create winners and losers. The winners will be the ones who positioned themselves correctly. The losers will be the ones who didn't. Which one will you be? Thank you for watching Boni's Life. If you found this analysis valuable, please like, subscribe, and share this episode with your friends. Follow me on social media for daily market analysis and geopolitical insights. And remember, in times of crisis, there are always opportunities. The question is whether you'll be prepared to seize them. I'm Boni, and I'll see you next time on Boni's Life.